Yeah, thank you very much, Julian, for having me here. I'm going to share my screen with you. That hopefully works immediately, and you should see a CQG screen. um, we'll start with a little PowerPoint presentation first, but I promise that I will only go over very few slides to introduce CQG and myself. CQG is in the market for 40 plus years, serving our clients in technical analysis, direct market access, and in constantly changing environment. We're always on the front edge to figure out what the clients need, what they want to do, and we are providing the solutions for that. Yeah, my name, Julie mentioned, is Helmut Müller. I'm working out of CQG in Frankfurt since 26 years now as an application specialist. My main expertise usually are in the direction of programming things inside CQG, using our high-end platform, CQG spreader network, and educating our internal CQG personnel as well as our clients and future clients. We do have offices around the world, so we do have a support office also in Shanghai. We are in Australia, in Singapore, in Europe, of course, and in the United States. So our customer support will like follow the sun on a 24-hour base. So anytime you have something, you can always pick up the phone and give us a quick call. So CQG network, just a very basic slide in the beginning. So the idea on the CQG infrastructure is it is like a one-stop shopping network. The big piece here in the middle is the CQG environment where we have all our data servers. We have all our hosted services, trade routing gateways, messengers, parcels. Everything is like controlled by CQG itself, by us. And it's shown as one bubble, but of course it has co-location for security reasons, so that if one data center might go down for whatever reason, we can easily switch between locations in different continents. Our customers usually connect via integrated client, QTrader, desktop, mobile, or APIs, normally via the internet to our CQG data center in the middle. And sometimes there's very little leftover number of users. They're using leased lines for security reasons, but these days, like everything is going to the internet. And on the output, our network connects to, meanwhile, more than 70 plus FCMs. They use our infrastructure, they use our cast environment, they use middle office, back office, and trading solutions from us. And we connect to about 60 plus exchanges around the world. And first of all, like in the beginning, just for market data, and for the last 20 plus years also for direct market access as well. I would like to have a little closer look on the infrastructure here to understand what's the benefit of using CQG in that respect, because I changed to that slide here because I can paint around here a little bit. So the big benefit on the infrastructure here is, so you're a CQG trader connecting to our network. You want to do, it's especially important on arbitrage and spreader trades. You want to do a trade. It goes from your PC, it goes to the CQG exchange gateway. It will be checked on the risk engine. If everything is okay, you can trade that. There's enough margin on the account, and so on. So first, then the trade would go to our server at the exchange, and you would be filled. And if markets match, you get a fill report, and it goes all the way back. So this is like the normal way of connecting things. In the CQG spreader environment, on most exchanges, on the most important ones, and on demand, if we have large customer demand, we have servers very close to the exchanges. So what happens, you put your spreader order in like before, it goes to the risk engine. It checks whether you're allowed to do the spread, if you have enough margin, and all of these informations. It goes to the risk engine. So far, it's exactly the same principle, but now all the cancel and replaces are only happening between our proximity gateways and the exchange. You get that information on the back channel that, of course, you're filled or where your orders are, but the speed between the proximity gateways and the exchanges are very, very important to get you good fills and to get you really, really good places in the queue. If you have travel around the world, depending on your location all the time, just physically that adds milliseconds to it, which we trying to avoid here with that technology. Let's talk a little bit about copper INE trading. I really like the slides from the speakers before very much. I put a very, very basic focus on the market itself because I was sure that there's some light scat on the details. On CQG, we are connecting to INE, of course, the copper trading in RMB per ton, and with the CQG platform with very, very, very easy conversion rates. You can manipulate the data, you can change the data, you can do any kinds of calculations. So when I was investigating, like, what can I do here on the arbitrage market, the first step I was trying to convert the RMB per ton into US dollars, looking from this side, from the European side. So I converted the market into RMB per ton. And I'm just using a fixed conversion rate here. You could also use RMB future to have that as an ongoing process, but it makes life just simpler if you look once on the chart and you put the conversion rate in, and then you're all set. I looked into the possibility to trade London copper on the LME versus INE copper. So therefore, London is also listed in USD per ton. So that is really, really convenient. So I can use the copper contract directly with like 8,300. The screenshot was taken a couple of days before. And the converted bonded copper into US dollar, and you can immediately see that there is some kind of price correlation. Once you have that artificial contract, I would call it, once you have that formula established, which is only really a couple of mouse clicks, you can put that data into any kind of chart in CQG for technical analysis. You can put all kinds of studies and indicators and mathematics around it. So once it's in there as the normal copper contract, and on the other side the artificial contract I created in US dollar, once it's on the chart, it's totally flexible to use. And I took the chance to overlay the two charts and to see if there's any correlation expected here. And obviously it looks like there is. We do also have more sophisticated studies where on a real-time basis, really can, with also like a simple piece of formula, just type correl for correlation, give me the BCUS 1 ton, which is my artificial contract I created, versus the London copper over 10 periods, and give me the correlation out of that. Within a fraction of the second, the CQG software would spit out this correlation information immediately on the chart. So it's very, very easy to use. Once you got into CQG in the formula business, you get the training from our side, but it's very easy to use. So once we have the two markets and we see the correlation into it, of course, why not just building the spread out of these twos? They're both now converted into price per ton in US dollars. So you can do the one contract minus the other contract. Just keep in mind the conversion rate. I just adjusted, it says 0.14, adjusted that slightly this morning, and you get a real-time chart of that spread. And of course, once you have the real-time data on the spread, we are able to put that artificial spread contract we just created also on a ladder. And this is the the moment when I want to change from PowerPoint slides, which are not moving, into some real-time data on the platform. Unfortunately, when we decided when we want to do this presentation during this time of the day, the bonded copper future at the moment is not trading, so we are past the last trading hour, unfortunately. So I can't do the arbitrage on a live environment now against the INE future, but I can do on a real time or live base, just as a demonstration purpose. It works exactly the same way. I was playing around with that. I can show the US copper versus London, which is basically this spread here. So I have a quote spreadsheet here on top where I have all the markets that are interesting for me. So I have the BC contract. If I just want to outright trade the future, of course I can do that. The little check mark tells me that it's not trading at the moment. Otherwise, I would see here the current market depths and bids and asks. This is the artificial contract I created. I just used a bonded copper contract and calculated the RMB into US dollar. And the first step I did, I was comparing it against copper in the US. And the US copper is traded in LBS, in dollars and cents per LBS. It's 25,000 LBS, and that's about 11 tons. So I thought, like, okay, why not just converting the bonded copper into an 11-ton contract? So I just put the multiplier in again, and I could compare the two directly against. So it's the whole like contract strength would be $95,000, and compare that with the CPE and converted the price per LBS into tons. So you could technically build a spread this way around if you want to. Of course, I can trade the outright copper, which is now up and running and open. You see the market depths here on my ladder. I can easily trade outright contracts here on the exchange. It's pretty early in the US, but the market is online. So here's now the spreads I created. I created US copper against the bonded copper. In this case, on this spread, that was my first idea. I was using the full size of the contract as the spread, so like an 11-ton contract, so with all the conversion rates in the formula. And I could see that there is some trending going on over the last couple of weeks and months. It was trending down again, and it seems to have like a little change in direction here. So I can in real time use technical analysis down here and see what the market is doing. Once it's in there, as I mentioned before, I can change it to a 5-minute chart, to a 1-minute chart, to 60-minute chart. I can do all my analysis around it. Second try, I did the US copper against the Chinese copper, but not in the full strength of the contracts. I used the pricing based on the US side. So that's another way around to do it. Then we have London. This is this one over here. We have the arbitrage between London and bonded copper on INE, which is also a very, very easy calculation. If you click on the formula box, it's I'm going to show you this one here. It's CP. That's the one I would like to trade now in a second. So it's the US copper minus the LME copper, and there's a conversion rate of the prices. The one is, as I said, in LB in pounds, in US dollars per pounds, and the London is in dollars per metric ton. So I just needed a little bit of a conversion rate. The US contract is, as I said, it's 25,000 pounds. So that's around 11 tons, where the London contract is 5 tons. So I have also on the trading side like a 2-by-1 ratio. So all this on top here is just it's just text. Basically, the formula you need to know is all that little formula. We help you, of course, creating that for you. Once you have it, you created that spread. I can put it on, as I mentioned, I can put it on my ladder. Oh, where it's gone. CP, that's the one. So, and on the trading ladder here on the left-hand side, I get like an immediately best bid and best ask based upon the legs of the outright contracts. So just a quick click here on the legs. I could see the two outright contracts and make sure there's liquidity there. The markets are moving, so the market's alive. I'm free to place an order now. On the trading execution, I put already the 2-by-1 ratio in here, and all I have to worry about is really I call it artificial contract, the spread contract. So I can place an order as it would be just a normal outright contract or an exchange traded spread. So I take the ladder, I select the price on which I want to buy at the 0.45. I place an order in the ladder. And now the system with all the defaults in place, you can of course manipulate it and tailor it down more to your exact needs, how you want to do the spread, which legs you want to work, and also kind of what if scenarios if you get hung on an order. But using simple plain defaults, what the system is doing, I'm trying to buy the spread for 0.045 here with a 5 lot. So the system is looking on the more liquid leg by default. Again, this can be changed. So it figured out that the CP, the US leg, is a little bit more liquid. It has more volume. So it's looking on the more liquid leg and trying to place an order on the London market based upon what it can execute immediately here on the more liquid market. This is, as a default, but you can very simply manipulate which leg you want to work. If you think you want to work both legs at the same time in order to get like a more speedy fill, that's possible. Can lead to the situation that you get kind of overfilled a little bit. You get like filled on one leg, and then because you're working both orders, and then you don't get the other leg. But that can happen. But it's totally up to you. And the other chance, what you can do, you can place the order in what we call the sniper mode, that you actually do not want to show your order on the order book. So you're basically in the background on our servers, you're watching, you're following the market, you're doing your analysis where the prices go. And only if the situation is there, the system would actually fire in the order. So this way you avoid a lot of ticketing and cancel replace orders, and you're not visible basically on the market that you want to do the spread. If I do it in the default way, you see basically the cancel and replaces for that orders. As we can see at the moment, it's really a bit away from on the London side. It's really a bit away from the market. So probably 2, 3, 4 ticks into the market, probably not a good chance to get that one filled. So what I can do on the artificial ladder, I can just take the price and move it up by 2 ticks, and you can see immediately that my order here on the right hand side goes closer to the market. The system will notify you if it can happen, of course, just one market moves away, that you get filled on one side but not on the other side. You get like a notification. You can configure a sound that's coming up telling you, hey, you're hung on the order. And it also changes colors. So if you're in front of the PC, you really cannot miss that there's something going on, and you're exposed to a directional movement on one side and not being filled on the other side. There's various techniques you can put in place once that happens. There's 2 approaches. On the default, with nothing particular said, the idea is if you got hung, you trade yourself out of the market yourself. Depending on the market situation, sometimes you just need to wait a couple of seconds and it all like settles back, and the market's coming back to you and you get the fill on the other leg. It's just a question of a little 10, 15, 20 seconds or 30 seconds of patience. If you feel the market is really running away from you, you could trade your way out of the market immediately. So you could choose to trade the leg that you have been filled on and trade out of that open position as one solution, or you can try to move then once that would get filled and it puts an order on the liquid leg that's not getting filled, you can manually just move the order closer to get filled, then you're not getting exactly the spread price you wanted, but at least you get your legs both filled and complete, and to avoid your vertical risk. So it's a kind of trader choice, saying which way you want to go. If you have presets, if you prefer setting this up beforehand, there's various controls in the CQG. I just want to show it very quickly. I don't want to go in all the details. That would probably take us like another half an hour to go through all the technical things we could do here. But in a nutshell, you can preset how the system should react if you get hung in this kind of order situation. So you can set something up like after 10 seconds, you're willing to pay up 2 ticks on the other leg or on the leaning leg. So you can pre-configure before trade various things here on the platform, here in the if incomplete statement. So you activate the if incomplete, you give your rules what it's supposed to do if the order is incomplete, and then this information goes, I can hit apply or OK here, this information goes to our servers when you submit the order to the spreader servers, and it will be executed. I cannot change it for the working order. So that order, I still see it on my local device here in Frankfurt. Of course, it gets all the informations in. I see it, but that order is in fact working between the server very, very close to the exchange and the exchange. So the only way to modify it from the behavior afterwards, I need to pull the order out. I change my settings and put the order back in. Normally, I do that general spreader overview with crude oil, for example. Like you can do calendar spreads on crude oil and other contracts. We tried a couple of months ago. We tried rubber spreads as well. Normally, like my 10 minutes talking usually is enough to get a fill. Not so much today. I really would appreciate if we get a fill report here on our spread. I think to get this filled, I need to move a little bit closer here to the ask side. So now we see the leaning order is kind of between the market, and has now we get a fill and has a higher potential to get filled, and exactly as I expected it. I hoped I get a little bit better price, but as I expected it, I will get a clean fill. So it went short 5 contracts here on the London side, and it bought 10 contracts here on the US side. No alarms popping up, no changing in colors, so everything went smooth and clear. I get the information I'm long 5. The spread as designated. Next step I want to do, I want to trade out of the position and just place a limit order on the sell side, and the system starts all over again, placing my orders. This was a very quick run through. I hope I was not speeding too much, but I've been told to stick to like 15 minutes, and I think I kind of made it. I want to hand it over back to Julian if there's any more questions on the system and how you place your orders on CQG.
Helmut, thank you very much. Very good demonstration there. Thank you. Okay, we're just going to move on now to our final speaker,